Well, I'm excited to have you guys on the podcast. Thanks for making the time, Ryan and Kelly. Want to just kind of have you guys do kind of a brief introduction, and then we'll get into it.
Yes, absolutely. Mark, this one's fun because like usually it's a solo show when we do a podcast, but we get to bring Kelly on. Kelly's the real personality behind Arch. Quick introduction, Ryan Eisenman, one of three of the co-founders of Arch and have run our business side since we started the firm in 2018. And Kelly was the first kind of like business sales hire to join us.
Yeah, so I joined Arch just about 3 years ago as the first sales hire and really focused on building out our strategic segment that services family offices, multifamily offices, RAs, and institutional allocators. So I'm excited to talk about Arch and all things alts.
I'm excited to have you both on. I know Ryan, it kind of puts the pressure on you to keep that energy level up because, Kelly likes she brings it. She's a fantastic business development person. So what a great early hire for you. So let's talk about Arch for a little bit. Obviously, we're going to talk about, how firms can scale around alternative investment data management, some of the trends that are going on there. But what problems does Arch solve and for who?
Great question. So we solve the operational and reporting and portfolio monitoring problems for anyone that is either allocating their own capital or supporting a capital allocation process. So that could be single family offices, multifamily offices, RAs, OCIOs, any type of institutional allocator, private banks, fund of funds, fund admins, accounting firms that are increasingly building family office services and fund administration style businesses. So it really is for this broader LP community and their advisors.
Congratulations on the recent RMS deal. It's a great team over there. So that's a big win for you. Congrats.
Thank you. We're excited.
So I like to ask this, like, what makes Arch unique?
Yeah, I mean, I think that Ryan kind of touched on it, that we really service anyone who invests in alternative assets. I think that, historically, there's been a really large operational problem around alternative assets. So that includes, collection of data, aggregation of data, standardizing all of that information in one place. There's a really long lag behind public markets where private markets reporting stands today. And so I think historically that's been the biggest problem that a lot of the platforms are solving for. And I think what we've uncovered with a lot of our client engagements and the firms that we work with is there's really more of a back to front problem of you absolutely need the operational information, you need the data. But then once you have that data, how can you improve the workflows, increase the client experience, make your actual ability to service clients better? And so I think that's where we really differentiate against other people in the space. And so thinking about once you have that data and that access, how do you make this scalable? How do you provide insights on what you're actually invested in? How do you create more streamlined workflows around managing capital calls and distributions? How do you create much broader transparency across a portfolio? And I think those are the elements that are really exciting and get firms excited beyond the data challenge. This is more around workflows, insights, and experience for the client.
I was just going to say, we really think of this not as like a single stakeholder problem. It's not just about the operations and reporting teams. It is really important for those teams, and not to minimize the work we do for those teams, but it's also how do we support advisors that need insights on how investments are performing, clients that want a first of its kind digital interface to see their investments and understand how they're doing, accountants who are logging in or who need a way to collect K1s, auditors that need statements. And so really supporting all those different personas in a multi-user platform where it can just be as simple as a permission to give someone access. But beyond the tech specs, we think we really differentiate because we care. We're in the office every day. We want this to be a long-term journey. We've turned down probably 3 acquisition offers at this point in our history. And we're just trying to build something that's really important, really enduring and long-term for our clients that continues to solve real client problems.
Yeah, I think it's great. I mean, for a long time, this was a pervasive problem with no solution in the industry. And now you're starting to see, multiple providers and, each has their own different take about how to solve that problem. But the good news for family offices that there are solutions to this kind of long-term pervasive problem, especially around that low value aggregation, the first mile of acquiring that data, converting it from unstructured to structured data. But how, Kelly, when you're talking to clients and prospects, how has the expectation or the need shifted over time, seeing how kind of that core kind of basic data ag is at least a known quantity at this point, but have you seen a change in expectations? Are clients coming to you with different problems that they want you to solve?
In some ways, yes, and in other ways, it's stayed somewhat consistent. I think Arch was really built out of the family office use case, and so we understand that type of client need extremely well. We understand the very complex portfolio, heavy allocation to alternative investments, a need for timely, accurate information that can inform, your ongoing investment strategy and decisions. And I think that's really helped us as we've moved into working with firms that service those types of clients, is that they're ultimately thinking about the end client experience as well. And so I think that the core operational piece you're talking about, Mark, is spot on, that like there is a data challenge and people need something scalable and they need something that solves for like that cumbersome process of collecting data, getting information so that they can actually service these clients. But their bigger challenge is, how do we stay competitive with the other firms in the industry? How do we make sure that we are servicing our end clients in the best way? And I think because we were built out of the family offices that they serve, we really understand that end client experience uniquely and extraordinarily well. Around this is beyond just data. People want information, they want transparency. And I think that's what shifted a little bit. I think some of our products like our look-through analysis, where you can see what portfolio companies you're actually invested in, our investor letter summaries to understand like what are your managers actually talking about. Those are built on giving more insights and like portfolio intelligence that goes well beyond just a data and operational challenge. And I think that's shifted quite a bit over the last probably 2 or 3 years.
That makes sense. I mean, beyond just kind of acquiring the data, that these investments have been very opaque. So to be able to get more kind of transparency into the portfolio holdings, even if it's to having access to that data, but then to just kind of manage it all, it certainly compounds itself very quickly.
Yeah.
Before we kind of really dig into it, Ryan, when I have a chance to talk to a founder, I always love that they hear their founder story, and really interested to talk to you about what was that kind of unsolved problem that you saw in the industry. I think we've already been talking about it a little bit, but really, why did you create Arch? What was the initial kind of thesis that you had? And then kind of looking back on it now, like where were you spot on, and where did you have to pivot?
Like all great things, takes a village. So I had some early experiences at a venture capital firm and at an investment advisory firm where I saw some of these front and back office problems, and then was trying to figure out the next thing to do in my own career. This was about 8 years ago now. Was lucky where I met an investor at a very random dinner in New York City, and over a series of coffees, essentially like pitched him this idea, really resonated with him. He was like, yes, I have over 100 K1s and fund investments, and this is all really painful. And I have Adapar, but my Adapar is not up to date. And even if it was, like, I can't actually interact with the data. And I need something that will tell me what I own and how those investments are doing in a way to like not be dragged into the K1 collection process. And then this investor was like, also, I'm talking to these 2 engineers. I really want to back them. They're really smart. They're interested in some similar areas. Maybe there's a version of the world where the 3 of you would become a team. And if you became a team, I'd love to back the 3 of you as a team. And so we kind of had this like very lucky, met Jason and Joel. We decided we had like very different strengths, which made for a great founding team, and had a couple of design clients we could start to build this around, a bit of initial capital from this investor. And so in 2018, he essentially put us into business. It's like, okay, we now have a company. We named it Arch. We have some clients. We can go start collecting their K1s. We could really learn the pain points of our clients and of our future clients from the ground up. And before we automated the vast majority of the work that we do, it was like me when we were a team of 3. emailing Sequoia Capital and KKR and Kleiner Perkins, being like, hey, we're looking for the 2017 K1. And also we need to change the address of this investor. And we need to get into this investor portal, and we need to get out of this interested party, kind of learning the fundamental building blocks of this industry we're in, so that we could understand them super well, really understand what our clients need, and then bring a lot of automation and great client experiences into the industry.
Good things really kind of came together. You had this kind of unique situation where you had this team came together. We're 7 years in now, where you're living it, you're breathing it, you're having to deal with it on a day-to-day basis. But where were the points around? A lot of firms, it can be difficult to get to your point, your size. Congratulations, but where are the hard points in terms of scaling a business?
Well, yeah, we think we're just getting started from this vantage point. But when we first started, we were like, okay, great. So we'll build this company. We'll be at $1 million in ARR in a year, and we'll just like be off to the races. And I think it just feels when you're just starting a company and you're super idealistic, it's like, wow, we're just going to make so much progress this year. There's a maxim around how it's like shocking how little progress happens in like a day, but how much happens in a year. And so it's just like this persistent pushing and continually solving problems, continually leading in and getting told no, but learning an important lesson, or getting told no, but getting a referral. That just like, and then staying persistent with this mission has allowed us to get to a point where I think now we're really happy at like what we've accomplished in 7 years, but we're looking at like the next 7 and 17 and 27 years of what we can do from here. We're still like a very scrappy firm. Like we want to maintain, even though maybe technically we're not a startup anymore after raising about $25 million of capital, growing a team to over 100 people. We want to maintain that startup culture and mindset around how we innovate and how we solve our clients' problems, because we know that's why like people want to partner with us and want to work with us, because like we can move really quickly to solve new problems and to leverage Gen AI in our solution and give people insights and help them with other problems that they're facing. And we also just care a lot about the client experience and service, because we know that like the next client will most likely be influenced by a current client, whether they're directly referred by a current client or they get a reference by a current client. So both from a pragmatic reason of having great client service helps us scale, but also from a we really care about our clients and want them to be happy reason. Those are a couple of places we really invest as an organization.
So it's often said that the private markets are broken. They're, especially when it comes to family offices have struggled, but then I think there's the next wave where RAs or high-end RAs, advisors are looking to allocate to private markets as well. Why is there so much friction when it comes to private markets, especially compared to public markets? And what are some of those key friction points family office face when they're investing in the asset class, and what can they do about it?
It's funny. I think that two things I want to hit on that Ryan was just talking about around how like over the last 7 years, we've evolved a lot. I think that the appetite for alts has evolved quite a bit as well. It's become a lot more prominent in a lot of clients' portfolios, but the technology and the infrastructure to support that is not. And I think that's what's been really challenging for a lot of these firms is they start allocating to private investments. And this then becomes a 7, 10, 15-year burden that you have to manage, on behalf of your clients. And so I think that, one is just access to the data. It's not available in a custodial account like your private investment or like your public investments are. So you just don't have a single source of truth. You don't have a single place where you can access this information. The reporting is a lot less frequent. You're getting maybe a monthly, maybe a quarterly update on these investments. And so there's just less actual activity on these types of investments. But you want to know, where you stand and have a sense of, the latest, value and unfunded commitment and like what your liquidity needs are going to be. And so I think part of it is that the market is catching up to the demand for alts, and hopefully we're helping drive some of that infrastructural change and shift. I think the other component of this is that the private investors have kind of been like an ignored space. I don't know what your thought is on why that is, but I think there's been a lot of new players coming into the market over the last like 2 or 3 years. All of a sudden, everyone has a lot more appetite to explore solutions here.
Yeah, it's like institutions have been allocating to alts for decades. You have Dave Swenson from Yale, who was a big early advocate of even having like 30, 40, 50% of your portfolio in alternative investments can really drive returns. And then firms like Cambridge Associates caught on to that and it had an early white paper around how 40% alts is great for long-term returns if you don't need liquidity, if you're the type of family office or institution that's investing for decades. And now that's starting to trickle downstream to more individuals, more multifamily offices and REAs. And both like there's demand and appetite, but asset managers also, as they look to grow, the net new flows in the industry are going to be predominantly driven by the wealth channel rather than institutions going from 40 to 42%. It's people that are at 3 to 5% going to 8 to 10 to 20% alternatives. We think that that's going to drive a lot of adoption in a place that doesn't have tools, but expects really good tools and expects really good interfaces. Because if you're an institution, you have been doing this for a long time, you have well-oiled processes, you're managing billions of dollars of capital, and it's okay to throw bodies at this problem and have people that will go into portals, pull information, and put it into the systems that the investment teams or operations teams are using. But if you're a family office or an individual, we just have this perspective on like that doesn't work for you, especially when you might now have dozens, hundreds, or thousands of investments where you didn't have those before. So it becomes a major crippling point for firms that are trying to grow in this space and serve more of that type of client. But also people just like demand and need better client experiences. So that's a big guiding force for us, is to build the experience that these clients need and deserve and might not be getting otherwise.
I heard even family offices are underallocated to alts by up to 20%. They're chock full of them. Certainly when you look at the wealth channel that some have no exposure to it or minimal exposure to it, maybe the client comes with it. Have you seen any differences? I know there was hope back in the day with like ILPA, maybe CalPERS trying to force some sort of standard or greater access to data, but are GPs more willing to provide data? Have you seen a change on the way GPs are offering information? Are GPs more open and receptive to how the operational challenges that maybe LPs are facing?
Yes, because as more GPs look to bring in more high net worth wealth channel type of capital, they're thinking about like, okay, those clients need a better experience around managing their investments, and they also want to make it easier for people to buy investments. It is like, in some ways, if you look at like a pessimistic view of the industry, it's shocking that people do want to invest in alts. All of the pain points and heartburn you have to go through before you even buy the alt, like the subscription process and logging into this portal to get the documents to understand on page 97, this is where they talk about the fees and this limited partner agreement. And then once you own the investment, you get 14 to 20 communications a year that you need to go back into the portal to get that communication, to route the K1 that comes late to your accountant, to complete the capital call in 10 days. So a lot of work, a lot of burden.
By the way, we're going to put all the important information in the footnotes too. And then we're going to capture it into a PDF, right?
Of course. So, and there like aren't great data feeds today. But it's like, okay, well, the optimistic reason is like, why do people invest in this asset class? Well, it's a higher return. You want 11% instead of 7% or something equivalent to that.
We're looking for alpha, right?
Yeah, it's more interesting. It's a different correlation. And so there are a lot of reasons why alts are great for folks. And I think there's GPs who are now thinking about, okay, how do I make it easier to buy, easier to understand, easier to manage your investments post-trade? And so we're having a lot of conversations with folks now around other ways that we can help them access the ARC toolkit or solve some of these painful problems. So if it's something that you, a listener of this podcast, are actively thinking about, we'd love to discuss with you because we are also thinking about ways that we can create industry change. One last thing I'll say here is like when Arch was initially founded, it was 3 people, took us 3 years to get past $1 billion in assets. Who would listen to us? If we went to a large asset manager and said, hey, can you create a better standard or create something that makes our clients' lives easier? They'd be like, not on our roadmap, not something we're interested in. Today, we have some of the largest asset managers in the world proactively reaching out to us saying, hey, we now see that you have dozens, hundreds, sometimes thousands of positions within our funds. How can we make this easier for you and then for our team and for the NLP? And that's the type of conversation we want to continue to drive.
The only thing I'll add there is I think that there's been some adoption of standardization across some of the largest managers. I think what's challenging with alts is it is quite a fragmented industry, and there are a lot of smaller, more boutique managers that clients want to allocate capital towards because it's a unique investment opportunity. It's great diversification. They want a portfolio that has a mix of some of the larger managers and maybe smaller ones. And so that has been a challenge as well. And that changing the entire industry is quite difficult when there is some concentration, but there's a lot of fragmentation as well.
When I was talking to family offices a while ago, we were doing some research into this problem. One described it as this, especially as first mile data aggregation, as cleaning bathrooms in the airport. Right? Like nobody wants to do it. Somebody's got to. And often it's the CFO that's doing it, right? That it's a high valued employee that needs to be able to translate that information. Where do you see in the arc of the industry, like in terms of automation and transparency around this particular asset class for family offices? Are we first inning, third inning, sixth inning? Where on your experience, like where's the adoption? Where are we in the adoption curve?
Yeah, I mean, maybe inning two. I think that there's a lot of room left to run. This industry is really not automated. You still have lots of clunky subdoc processes. There are some great solutions that have come in trying to digitize subscription documents, mostly from the GP's perspective. Take the subdoc, put it into a digital form, give it to the LP. Those are much, much better solutions than giving someone a PDF. So that's great. But then like manager A might use one provider, manager B uses another provider. So we're still in this like highly fragmented, highly siloed industry. And we really believe in this best in class ecosystem of solutions that can talk to each other with the ability to like provision data from one tool to the next. So if you're using Arch and then you want this data to go into your Adapar or your Archway or go to your accountant, then you should be able to be like, great, I want to send data to this system, this person, this organization, and be able to create a lot of collaboration between different tools in the space.
I think it's important not to have the digital rails. Like this stuff doesn't live on an island, and that it's important to be able to integrate into the broader tech stack. And I think it's a great example, Arch is, of kind of best in breed, that you're focused really on this particular problem. Obviously, AI has been a big enabler for this particular industry. Talk to me about AI being a driver of productivity and efficiency. How is AI changing the landscape within your guys internally, and how is it changing it for family offices?
Yeah, but the biggest thing I think is just how it shapes the dialogue within the industry.
Yeah.
Because now you have folks that maybe haven't made a change. They might be running on the same system they've been using for 10, 15, 20 years, whether it's an allocator, a family office, an institution. And they're like, holy cow, this world really is changing under our feet. There are new tools, there's new technology, there's new methodologies, there's new ways to interact with this information. And we don't want to get left behind. We were talking to an asset manager, this was about a month ago now, and they were like, we've looked at dozens of tools. Everyone's talking about AI. This is the first time when they like saw a demo of Arch, we've actually seen AI in a platform in a way that's like usable to the end client. So we're looking to be on the front and cutting edge of leveraging AI and helping our clients leverage AI. So you don't have to be an AI expert. You don't have to do your own development, but we can give you like really simple, well-designed tools that allow you to understand what's in a quarterly report or what's in a LPA or what's in any of these documents that have like a lot of text, but you're really looking for the insight. So what is the manager telling me, or what do I need to know about this investment I'm about to make? And that I think is a big part of our story. And it's like something that wasn't available 3 to 5 years ago when we started the company, but something that can like be leveraged on top of the foundation of how we collect information and aggregate information today. And then it's just like the display out or the usability of this information. So we think it has a big ability to push this industry along with a lot of other industries forward by introducing new tools, but especially changing the mindset around innovation and taking organizations that might be slower to purchase to realize that like, okay, now is a great time to think about the new solutions and unlock this new buying wave.
I mean, I totally agree. I think there's an element of like the vertical integration of AI where there are some really specific nuances and complexities of like the industry that we work in. And we can be experts in that. So our clients don't have to be. I think like consumer adoption of AI has actually been quite strong. Right at the beginning of this, we were talking about, we were at a conference earlier this week. I think every single panel talked about AI in some way or some form. Like,
Yeah.
I hear there's like 25 or 30 panels on AI at Future Proofs. Is that
truly, I think every single panel, no matter what the topic was, had some underlying theme of AI. I think that it's sometimes difficult to use it in the most relevant or applicable way. And so what we're really taking on as like a technology firm is thinking about how do we apply this to the most relevant use cases. I think what Ryan was talking about, unstructured data, making it structured and pulling out insights is a great example. There's other ways that it can continue to create more efficiencies and increase like our ability to provide more solutions to our clients. But I think there is an element of like vertical integration that is important, that like we are a very nuanced part of the industry. And so it's hard to just slap AI in there and be like, figure out all my problems. I think you have to think about the actual integration of it into a system.
do we see AI as being something that is going to be that kind of gets family offices off the snide? Is that this is going to cause the modernization of family office that people have been talking about forever because they see this kind of 10x or maybe inefficiency on technology or maybe fear of being left behind? Where do you see the industry and the impact AI is going to have?
Yeah, I think it would definitely help. Probably like partially because of the tools, and then partially because we were talking about earlier around just like giving people the headspace to look at new tools and evaluate new frameworks and really think about AI and think about modern tools. But I think that there's just this broader push. Like there are now way more family offices than there used to be. Alternative investments are a bigger theme. You have this broader wealth transfer that people are talking about where family offices are being passed to younger and younger members who are a little bit more tech native. And so I think you're just like naturally going to have interesting solutions come to market. So I think there's going to be more talk about this like virtual family office style model. But then you also have the like proliferation of multifamily offices, sometimes called RIAs, sometimes called OCIOs, that are also allowing families to essentially have a lot of the family office resources and know-how without having to staff it internally. And those are getting to be pretty sophisticated. Sometimes they have wealth planning internal. They have like CIOs that are able to invest capital across pretty sophisticated alternative and non-alternative investments. So the menu of options available just like is much bigger than it used to be. The tools are greater than they used to be. So I think you're going to see a lot happen as how that's in this space evolving in the next 3, 5, 10 years.
Yeah, it's the golden age for family office technology. The good news is there's more options, but the bad news is there's more options, right?
More options, yeah.
There's a bit of buyer confusion out there, right? And I think sometimes people get stuck about not even knowing what to do next because they're a little bit overwhelmed. But it is great to see the options out there. I do think the family office model is a winning model. The multifamily office model is a great model, but it also comes, they have all the complexity that a single family office has, but then you also have the need for scale. So, it's even more important for firms like that deploy technology. What other tech trends are you seeing that are impacting the space beyond AI?
Good question. I think there's a lot of pain around things like capital calls. So as there's more capital calls, and then some of this is actually like AI driven. There are now really good ways to impersonate people. Most the like folks that have family offices, people that work in this industry have some kind of public profile. And so it's like pretty easy to take someone's voice, take their likeness, create a video that looks like them, create a call that sounds like them. So I think we're just going to see fraud get more and more sophisticated. So we're starting to invest in some fraud detection tools for capital calls that can look at, do these wire instructions match your prior wire instruction? So that's the first thing that we've commercialized and brought to market. So looking at how do we move beyond saving people time, which we want to continue to save folks more and more time, but like bringing solutions that fight fraud, lead to insights, help people make better investment decisions. So that, because like getting left behind doesn't just mean I'm less efficient or allocating capital less efficient. Getting left behind might mean that I'm like now a target. And so we want to really help this industry mature and creating like more secure systems and more secure ways to manage investments.
I think there's also just a lot around like workflows and integrated solutions. There's kind of maybe two things driving this. One is there's a lot of merger and acquisition activity in the MFORA space. And so as you bring together firms, you have to really think about how workflows are impacting the ability to do business as a combined firm. I think that's been a theme we've been seeing of when firms combine or they buy another firm, integrating that into the existing systems and workflows is challenging. And so using technology to support those component parts is helpful. I also think for family offices, they tend to operate really lean, and there's many different folks that need to be involved in different parts of the process. So thinking about workflows that evolves over time. If you bring on new technology, you have new workflows that need to be built. And so I think there's elements of like integrated and workflow solutions that are important too.
Sure.
Workflows, integrations, APIs. I think vendors are putting much more emphasis on their ecosystems, right? That 1 + 1 = 3. The best of breed has finally moved beyond kind of a science experiment, and it's really with the vendors coordinating with each other. It's a lot more possible for firms to be able to kind of piece together a best of breed tech stack. I think that's been helpful. I hope the family offices that they realize that there's sometimes a greater risk to not taking action, right? That the fact that Ryan, you point opening yourself up to fraud, and don't let some event cause you to get into a buyer's mode or have to do that under duress. I mean, the voice callback used to be the gold standard, but now with just 2 or 3 words, AI can kind of copy your voice or even you replicate an image. It's pretty scary, given that the bad guys have access to AI too. The future of family wealth. So we've already been touching about this already in a number of different spots, but where do we see 1 year, 3, 5 years out? What's the outlook on the industry?
I think you're just gonna have like a lot more options available to people on how they manage assets. And so like with options becomes you can kind of create the system that works for each family. And so it's kind of back to like, do I build it in-house or create my own family office? Do I outsource the accounting piece? Do I outsource the investment piece? So a lot of people really think about where do my strengths lie and where am I not strong, and being able to augment that with tech and services and other types of solutions. And it's interesting that like the number of products that are now available. Like if you wanted to invest in KKR several years ago, you would have had to write a $5, $10, $25 million check in order to have access to KKR. Now all of these large funds are making their funds available for $50, $100, $250,000 checks, maybe even smaller. And so it allows for this greater access to private markets and this greater level of diversification that we think is like really healthy for the broader market. And we'll probably see as there's more access, more exposure, solutions for liquidity will follow, and other solutions will follow that make it an easier market to be a part of.
I think the other thing that we've seen happen a little bit across some of the accounting firms and multifamily offices that we're working with now is just creating more of this access to family office services at a slightly smaller portfolio size. I think there's been a bit of demand from sophisticated investors that they don't fit into that family office bucket, or their portfolio size is just slightly smaller, but still need access to some of those concierge technology solutions, other type of family office services. And so being able to offer that at a slightly lower portfolio size, I think is another trend that I think is going to continue to evolve.
Yeah, I think that's a good one. I mean, bill payment's a great example of that, right?
Yeah.
That ultra high net worth clients, that somebody's doing their bill payment for them somewhere. And if these service providers can incorporate that function within a family office services type of offering and be able to provide more holistic service and have a greater data set to be able to provide better reporting and advice to their clients, then you're seeing that versus, trying to keep that at arm's length or having a personal bookkeeper do it. So yeah. I think there's a lot of, we're just at the beginning of the golden age for family offices, both on the single and the multifamily side. So it's great. What I like to do at the end of these podcasts is kind of wrap it up more on a personal note. Oh, it's 3 questions that have nothing to do with alternatives. So
I love it.
the first question, I always find it interesting. A lot of people have some sort of unrelated skill or hobby that people don't know about. I was in the Olympics as a canoeer or whatever. What is the one thing that maybe somebody doesn't know about you in terms of what you do for a hobby or some unrelated skill that you may have?
Ryan, were you secretly in the Olympics? I hope that's what your fun fact is.
I wish. One of my better outside of work athletic things is water skiing. Just incredibly passionate about slalom skiing, and it's something that every time I got an opportunity to, I'd always do it and try to get better. So can run a slalom course, and it's something that I think is really, really fun.
I think mine is way less cool, way less athletic. Probably, I don't know if anyone knows the site Sporkle. When I was growing up, that was my passion project of Sporkle Quizlets. I would always go in. I'm very good at memorizing things. And so the map of, Europe, filling out all the countries, or memorizing certain data sets and then sporkling it. That kind of ties into puzzles as well. It's a less cool than Ryan, but probably.
Hey, Ryan wasn't in the Olympics,
my secret talent. Yeah,
Mark,
there was a puzzle Olympic, maybe.
Yeah, there should be. Mark, what do you have? Do you have one?
When I was in college, some of my roommates were in the culinary program, and I was trying to get a job as a dishwasher. And my roommate Johnny's like, "Dude, I told him you could cook," and put me on the line. So I ended up cooking professionally for a number 3-4 years, and nowhere close to being a chef. But I worked on the line in a restaurant. For a civilian, I can throw it down pretty good in the kitchen. So that's my secret skill.
Super skill.
Favorite. I love New York City. You guys are in New York City. You live and breathe it every day. What's your favorite thing about New York City, and what's your favorite location in New York City?
I just love the variety of things here. You can do almost anything except for find nature, but you can take a train and find nature, so you actually can find nature in New York City. And you just walk in a different direction, and you stumble upon a new restaurant, a new location, a new shop that's been there potentially for 25 years. And just always interesting people. I also think New York is actually one of the friendliest cities. This might be a contrarian take in the country. Very actually easy, I think, to meet new people and make friends, maybe because it's so harsh sometimes outside that people are very actually receptive to meeting strangers. My favorite place is this restaurant called Win Sun, or favorite new place, which is super interesting. I think it's Taiwanese food, and a very casual, fun atmosphere in Brooklyn.
They just opened a East Village location.
I have to run over there.
So I think, kind of similar thing to Ryan, New York is a very transient city, so it's always changing. I think how dynamic of a city it is fantastic. It always keeps you on your toes. I like to, I stole this from a friend, but kind of get lost in your own city, choose a neighborhood, go wander around, try a restaurant, shop, explore the local neighborhood. I think that's a great way to learn more about New York. And I've tried to adopt that into my weekend life. But yeah, New York is, I think, one of the best cities in the world. And I agree with Ryan. I think it's people are kind in New York. They might not be friendly, but they're kind and open.
Yeah. Well, Boston has the same rap, right? Where, and I've heard this analogy, and I think it's at its heart, it's spot on, but maybe it's a bit of an exaggeration. Is that people on the West Coast are nice but not kind, and people from the Northeast are kind but not nice. Meaning, and the example is if you're stuck and you had a flat tire, and somebody from California would be like, "Oh, dude, that's really too bad," whereas somebody from Boston and New York would get the tire out and change it and make fun of you the whole time, be like, "Dude, how come you don't know how to change a tire?" But at the same time, would get you to where you needed to be, and would get you going. So I think it's an exaggeration, but I think there's some that holds to that. And I do think New York's one of the greatest cities on the planet, and you could probably spend the rest of your life just discovering restaurants and neighborhoods. And I love it. It always seems to be reinventing itself. It always seems to be kind of different neighborhoods are changing all the time. So Beyond that, what's your favorite travel experience or location beyond the city?
Wherever the next wealth tech, fintech, asset management.
Or whatever next future proof is.
That's okay. Great. Mine is
Hey,
probably
Miami in March. Yes.
not so bad. Not so bad. I think Ryan can hit the nail on the head. You can find almost everything in New York except for nature. When I travel, I like to go like opposite end, right? I like to go somewhere that's very maybe more remote or nature focused and kind of like be in nature because we live in the city. I don't know if you've been to Iceland. That is one of my favorite trips I've ever taken. It's not that far from New York. All the East Coasters out there, go to Iceland. It's very short and it's otherworldly. It's probably one of the best places I've ever visited.
I've been trying to talk the wife into it. I wanted to do it as a stopover heading over to London. And I got to get it on the list. I would say, well, I go anywhere once. It's a big world and you never know. Every place has some sort of value to it. But, in terms of outdoors, out west is always big and grand. But I love Europe. And my favorite part of Europe is Italy. Europe's the best and Italy's the best of Europe. And I'm lucky that both my daughters went to school over there for a semester abroad and had a chance to kind of visit it a little bit, and I can't wait to go back. So that'd be my location there, my happy spot. But I appreciate you guys taking the time today. This was really great. It was kind of fun having both of you on. Really insightful conversation, and thank you for sharing.
Thanks so much for having us.
Thanks, Mark.